Hiren Ved joins us. Hiren, good morning. Thank you for joining us. If I put all the headlines in front of you, Hiren, what is happening to the world, what is happening to the economy, that there is fear of a second wave of virus coming back, are you pleasantly surprised and delighted that despite odds, markets have managed to climb the wall of worry?
Yeah, I think Nikunj, whenever we have such a big fracture in the market, you typically see there are always pullbacks that you see in the markets. And I think, while our stimulus package has just come in yesterday, but our markets had already reacted to the global stimulus and recovery. Though India obviously underperformed most global markets and continues to underperform the global markets. But I think that we also saw a fair bit of recovery from the bottom because of the stimulus measures that were taken in the developed markets. So, in some senses, you can't double count, right, as far as the markets are concerned. But I would say that considerable uncertainty still remains. I think that we do not know how the recovery in the real economy is going to be. And while markets can be on their own in the short to medium term, but eventually they have to reflect the realities on the ground. And I think that is a process that we have to still go through and negotiate over the next few weeks and months before we can claim that we are out of the woods.
So, where do you think the balance will happen, Hiren? Like we've often discussed that markets are always right. It is our understanding which is perhaps wrong. The understanding of a lot of folks on the street I spoke to, Hiren, is that economy will remain weak and markets are running on steroids. So what will surprise us? Markets will come down and align with the economic reality, or somewhere economy will surprise us? Because what looked impossible 3 months ago, or let's say 2 months ago, now is looking slightly real.
Yeah, so I think what has happened, Nikunj, is that in all the previous crises, right? I mean, even during demonetization, there was a lot of worry we had as to what's going to happen to the economy now that 85% of the cash is out of hands of people. But, we did see a very rapid recovery in the economy back then. But this time, is very, very different. I mean, we've never ever experienced a situation where the entire economy comes to a grinding halt, right? A complete halt for like 40, 45 days. And then to crank up and restart this engine is not going to be very, very easy. So far, we have only been discussing supply side issues as to once the lockdown opens up, how will businesses get back on their feet. That is one aspect, obviously, which also we have to see. And I'm hoping that lockdown 4 will be far more practical on that ground as compared to the previous lockdowns that we have seen. But then, in my opinion, the focus will shift to the demand side. That, what do we do with demand? And I think as long as there is uncertainty, there is going to be uncertainty on the demand as well. So I think over the next 2 to 3 days, it would be interesting to see what the stimulus package does to restore some level of demand. I know that we don't have too much fiscal space to spend, but it's important that at least some measures are taken to stimulate demand given the current environment.
Hiren, 3 months ago it was fashionable to talk about only right things about NBFCs and stocks like Bajaj Finance and AU Financials. Fashion changes and fashion has changed. Now it is fashionable to only find fault lines with some of these good NBFCs and names like Bajaj Finance. How do you view some of these good banks and an NBFC like Bajaj Finance in the light of what is going on? I mean, the problems are well known, or you think problems will only magnify as the economy gets exposed more and more post the moratorium gets lifted?
So Nikunj, I think that when we talk of banks and NBFCs, and especially the high quality ones like Bajaj Finance or HDFC Bank or ICICI Bank, I think that there are two things, right? One is the liability side, and I think on the liability side they are sitting pretty okay. I think that for them access to money is not an issue. Unlike it is for, let's say, smaller NBFCs or smaller microfinance companies. So I think banks are willing to lend these NBFCs. The large private banks have a great deposit franchise. So I don't think the liability side is an issue. I think the problem is on the asset side, right? Now, what happens is that essentially, one is that growth takes a toll. Secondly, we do not know what is the extent of the NPLs that would hit the system. And the third thing is, the regulators and the governments essentially in a tough environment like this tries to help the borrowers. But when you start helping the borrowers at the cost of the lender's balance sheet, that is where the problem starts. So I think what happens is that good lenders then decide that they want to substantially slow down their growth because they don't want to take too much risk in the system. And therefore, some of the valuations that they got because of the growth which was there will come off at least in the near term. I have no doubt at all that these companies will survive, grow, and actually consolidate even better during a time of recovery in the future. But currently, I think there are headwinds. Then we must also understand that there is an uncertainty. Like, for example, somebody has filed a plea in the Supreme Court saying that borrowers should not pay interest during the moratorium period. Now, if something like that happens, that would be crazy, right? Because just imagine the bank telling you that because my borrower is not paying me, sorry, you have a fixed deposit with me, I can't pay you interest on that. So I think there are some, while there is not a structural challenge, but there are near-term uncertainties and challenges which is weighing on the prospect of these businesses. I have no doubt that these businesses will come out stronger. The industry is going to get even more consolidated. But in the short term, we have to live through this pain.
Do you worry about the over ownership in a Bajaj Finance or an HDFC Bank or the beta play which everybody played in an ICICI Bank? What I'm trying to ask, Hiren, is that the big ones will survive. Everyone knows that. But some of these big names which we know will survive are the ones where the selling is there and are the ones which are extremely over-owned. So if there is a liquidity risk, these stocks, they come tumbling down as if a Humpty Dumpty has fallen from top of a wall.
You are absolutely right, Nikunj. And that is why, that is why these stocks are behaving the way they behave, because, people were overweight in these names because that is where the growth was pre-COVID, right? So essentially, people were positioned to take advantage of where the growth was faster than what the average system growth was. And obviously, these were quality franchises. And therefore, I think if people have to reduce their exposure to equities or if they have to reduce their risk, that is why these names are getting disproportionately impacted. So I think you are absolutely right. I mean, we are paying to some extent the price of overexposure that investors had to this sector, without any doubt.
You've been buying into pharma. What is the logic here? Are you excited about more medical spends, or this is just a portfolio correction which you are doing because you are underweight pharma and now weightages have to align because financial weightages are coming down?
Well, we've not gone like we've done very, very little in pharma. It's not that we've gone massively overweight or something in pharma. I think that, these are names that we wanted to buy even pre-COVID. But the market fall in March gave us an opportunity to at least get into some of these names. I think pharma is a sector which looks interesting, but in my opinion, I think stocks have run up too fast, too quickly to justify the fundamentals at this stage. Yes, there are some companies. I think in pharma, you can't take a sector approach. You have to take a company by company approach. I think there is considerable value. I think there is considerable merit in looking at API manufacturers, because I think that there are going to be tailwinds there. India has always had, traditionally, we had strengths in API manufacturing. And I think that is where, with supply chains moving to some extent from China to India, and every country wanting to rely and having self-sufficiency in medicines, I think that API manufacturers will do exceedingly well going forward. Plus, I think that given the fact that whenever we see that the macro is in stress in India, you know that the rupee tends to depreciate. And so there is a tailwind. And in this scenario where it is very difficult to find where earnings growth will be, I think at least there is some tailwind in terms of the depreciation of the currency that might come through. And therefore, we have done a few things in pharma, not too much. It's an area of interest, but I think in the short run, because people were so underweight pharma, everybody has bid up prices like crazy. So I think once there is some sanity that comes back, we will definitely relook at that sector and a few names there.
So what are you betting on, Hiren, in terms of an early revival play?
See, Nikunj, I think that there are going to be opportunities on the agri side. I think basic consumption will do well, but that's already in the price, in my opinion. But I think the sector may continue to do well because, in the near term, that's where the visibility is the highest and the volatility of the earnings is the least, right? I think what would be interesting is that maybe not immediately, but I think that there will be opportunities. So it's a spectrum, right? I mean, where you see that the earnings volatility is the least and the perceived risk is the least is where the money has gravitated towards. And where the perceived risk is the highest, which is in sectors like financials and consumer discretionary, for example, right? I mean, that's where companies have taken a significant beating. I think you will find some good opportunities there for taking a long-term bet. But I would say that we still have to negotiate and see what is the kind of damage or what is the kind of earnings damage that happens to these companies and how the market prices them in the interim. At this point in time, I would say that the markets will give you sufficient time. I think the markets have to negotiate a tough period. They have to absorb all the risks and uncertainties. So I don't see a hurry to step in and try to catch any bottoms as yet. I think it is better to have far more certainty and then bet maybe at a higher price, but where the certainty is the highest. Because as markets have shown you, anything is possible in markets. Nothing is as low as what you think and nothing is as high as what you think.
Okay, so let's take the definition forward. Where do you think there is high perceived risk or high uncertainty but a lot of comfort of valuations? What would be that spot where today everybody is thinking, oh, this will go wrong, this will go wrong, that will go wrong, everything will go wrong, nothing will go right? But you think you want to be a buyer. Where are you buying fear, Hiren, in this market? That is your style, that, cut the noise out, read a balance sheet, look at ratios, look at historical averages, and then go all in. Doesn't matter what you hear from brokerages or on technical side. You say, look, I'm buying this. What is that idea? Like you bought TTK Prestige, like you bought Dynamic Technologies. What is that idea Hiren Ved is buying in 2020 summer fall?
Nikunj, I think that, I can't talk individual stocks here for sure because of compliance reasons. But I would say that there is, there are a couple of areas that I would look at. From a valuation perspective, I think financials are definitely the cheapest because the perceived risk is the highest, right? But I already have a weight in financials. In fact, I was overweight financials and I've cut down my weight in financials a little bit. So in the immediate term, I don't presume that I have enough weight in financials. In the immediate term, I may not necessarily go out and buy financials. I think where I'm looking at is that there may be areas in consumer discretionary. There may be, I think telecom is an interesting area. In my opinion, I think there is a new phase coming in telecom, which could be quite interesting going forward from here. The industry is consolidated. I think pricing has hit rock bottom. And I also believe that there is strategic interest in this sector. And I think the post-COVID world is all about digital, online, being on mobile. And therefore, that could be one area of interest that could be. And I think there are individual opportunities, bottom-up opportunities that will come along the way. I also believe that, there could be opportunities in sectors which straddle both the domestic market and the export market both. We haven't done anything here, but that's the thought process. I think, autos have been beaten down, auto ancillaries have been beaten down. That could be an area of interest because that is where companies have both domestic as well as an export profile to look at. The sector has underperformed for a couple of years, but if demand was to come back, then that could be an area of interest. I think agrochemicals is something which one should look at. So these are some areas of interest that we have. As I said, we are not trying to bottom fish at this point in time. But I think markets will give us opportunities between now and the next few weeks and months to get in and take these long-term bets.
Hiren, should one continue to own stocks like HUL, Britannia, Godrej Consumer? I mean, these are good businesses. And in this kind of an environment, they may optically look expensive, but you are reasonably sure that a 25% growth will not become zero growth. I mean, will that be an anchor of your portfolio? I mean, forget about buying cheap, but investing is also about managing risk in this kind of an environment. Would you spread your wings in buying or remaining keeping these stocks as an anchor stocks?
No, absolutely. I think, I think that while they may be expensive, but I think that in the current context, and I think even in the near-term future, I think these companies will continue to do well because there is visibility of earnings. And I think that if the government is going to focus on putting money in the hands of the people at the bottom of the pyramid, right? Then I think FMCG stocks, which have spent years together to deepen penetration into the rural hinterland, are definitely likely to benefit. And I think, as you rightly said, Nikunj, it is not about completely lopsiding into so-called defensive sectors or going completely the other way. It is about how you manage the risk in the overall portfolio. And I think that some of these high quality franchises should be there in the portfolio, which gives stability, visibility. And obviously they are clearly, I mean, if market wisdom has to go, then, there is a reason why there is strength in these stocks.
Hiren, everyone is confused on how should one view IT. These are companies which will not go belly up. Dollar is on their side. But given that some of the big retail companies are filing for bankruptcy, airline is in a tizzy, do you think for IT companies more than solvency, it's the order cancellation which is going to be a key challenge? So far, IT companies have refused to give any guidance. Nobody is pressing the alarm button. Actually, I'm surprised. Do you think markets need to be cognizant that IT is headed for a very bleak quarter or a bleak 2020?
See, Nikunj, my view on IT is that there are short-term headwinds and there are short-term tailwinds, and there are medium-term tailwinds. That is the way I would look at the IT sector, right? I think that in the near term, yes, there could be some order cancellations or maybe there could be deferment of spending. That is very much possible. But at the same time, I believe that structurally, I think if there is one area where all companies would spend, then I think it is going to be on technology. I think the COVID crisis has told us, has even accelerated the adoption of digital, of every business will have to reach out to their customer or communicate to their customer or transact with their customer digitally. And therefore, structurally, I think that maybe there could be a short-term lag, but on the longer term, I think that tech spending should come back. That is point number one. Secondly, what happens is that in these times of uncertainty, these are companies where growth may not be great, but they have tremendous cash on the balance sheet and the ability to generate cash, right? And also many of the companies have started to pay back large amounts of dividend and give this cash back to the investors either by way of buyback or by way of FD dividends, which kind of supports, and the valuations are not very, very demanding if you compare it to staples and other consumer companies, right? And therefore, and the third thing is that while there could be headwinds on top line, there could be tailwinds in terms of currency depreciation. So I think that the large cap IT will be quite defensive. And I think that while most of them have suspended the guidance given the uncertainty, and yes, there could be an impact on growth in the near term, but I think in the medium to long term, tech spending has to go up because people will spend more on technology than they have. I mean, you look at the commentary of every bank, every company, every retailer. They are all saying that we want to reach out to our customers online, right? So I think going online, advertising online, talking to customers, servicing them is going to be a very, very big trend. So in my opinion, I think it's a space which one should keep on our radars, and there could be interesting opportunities that can come up in tech as well.
Apart from Bharti, is there any other way to bet on telecom, Hiren? Because Bharti is the obvious one.
Well, right now, that's the only one, I mean, which is investable, right? And maybe at some stage, we do not know if, Reliance decides to restructure the business into separate businesses. We may have an opportunity in the future, but that is to be seen when it has to be seen, because right now you have to bet on everything, oil and gas and retail and telecom, everything put together. And some investors may not want to buy some parts of the business, while there may be certain parts of the business which may be more attractive, right? So I think, yes, for the time being, that's the only option you have.
It's so fantastic to have you back. We got into a very engaging and a long conversation after a while. So I look forward to more engagements going forward.